Why are more and more Americans every single year, especially ultra high net worth Americans, shifting more and more of their portfolio into alternative investments? Take a listen.
The idea of an alternative investment for like an average retail investor, they go to the financial advisor, like, oh yeah, we'll get you some REITs, maybe we'll get you a little bit, a small percentage into gold, and you still have mostly 60-40 bonds or stocks bonds. We'll get you a couple percentage points in these other things just to have exposure to it and diversification. But the problem is, over the past several decades, we've seen the real fissures of the 60-40 portfolio kind of come to bear, because what's happened is most of the public markets, whether it's equities, bonds, commodities, they've all become much more correlated than they have 20 years ago. And normally the idea was, hey, if stocks are down, bonds are up, and vice versa. So if I have some exposure to both, it's going to reduce my volatility. And over time, that's going to benefit me from diversification. Problem is, all of those asset classes are moving much more in concert than they ever have. Like, we can prove this mathematically. It's just not me just making stuff up. This has absolutely happened the past 20 years. And so what's happened is, we all, if you believe modern portfolio theory, right, which is the foundation of our financial, planning system, which at the end of the day, ultimately says diversification provides you the most free lunch you can get anywhere, right? If you have some level of diversification, you set yourself up for much more success than if you didn't. Right. We can get into some of that if you'd like, but the problem is you can't get diversification in the public markets unless you go outside, right? And that's, I think, part of this feeling of like, man, there's got to be something else that we can have access to as investors to really get the best risk reward kind of pie,